How's it going, everyone? Welcome to the Proving Ground Mastermind. We're going to get started here in just a few minutes. Once you guys get logged in, let me know if you can see my screen and if you can hear me talking. Just another minute, we'll get started. All right, I'm going to assume that you guys can see my screen and hear me talking. Feel free to say hello, chat in. Let me know you guys are live out there in virtual land. All right, let's go ahead and get started. So as always, like, share, follow on social media. If you guys get opportunity, definitely chat in some of the videos, even if it's just a quick chat, like, good video or bad video, boring, whatever, right? Really liked this part, whatever it might be. Try to throw in the chat. That would be greatly appreciated for those of you guys that have been liking the videos. I thoroughly appreciate that. Thank you very much. Appreciate it, Jordan. Thank you. Good morning to you as well. So we're, in addition to Facebook and Instagram and YouTube, we're also on rumble.com. I don't know if you guys are familiar with Rumble. And it is rumble.com, and we're Day Trade Smart. And then we are also on TikTok, which is, my goodness, man, that is the weirdest. Maybe I'm just old school. I don't know. It's just a weird app to me. Anyway, we're on TikTok. So, if you guys are on any of those social media platforms, definitely go on there, like, comment on videos. It'd be greatly appreciated. All right. So let's go ahead and get started. What we're going to focus on today is we're going to look at it in both Green Chart 1 and Green Chart 2. We're going to look at some nuances of pressure. These are some things that I've been actually working with quite a few of you guys on, and the difficult part is that it becomes very discretionary. And so the struggle for me is always to try to figure out a way to make it so that it's applicable on a almost like a pseudo-systematic, well, more like a hybrid systematic discretionary approach. Some of you guys are ready for this kind of stuff, and I think, along the process, especially those of you guys that have been here for a while or have done a lot of studying on indicators, pressure, things like that, are ready for this, but I think my reluctance is there are those that are not, and so I've always kind of held back. But for everyone else, at some point you'll catch up, and you'll have this video in the mastermind that you'll be able to reference when you're ready for that step. For those of you guys that feel like you want to, really explore the pressure indicator, and you're new or you haven't really studied very often, and let me clarify, it doesn't matter if you've been here for a long time, and not just mastermind, but trading or with Trading University. It doesn't matter the length of time that you've been around. It's the amount of effort that you've put into studying and looking at the indicators and trying to understand them at a deeper level. Someone that's been here for just a few months could very well be, far beyond all of us if that effort was put within those few months. And so, I want to be clear about that. So just being here, doesn't necessarily mean that you're going to be more fluent with the indicators, but rather that you've put forth, an effort. And if that's not a dog, and that's not, it's not saying, if you've been here for a while and you don't understand them yet, I'm not trying to dog you. I'm not trying to say anything. Really, whatever time that you have to put forth into your craft, into trading, into, you know, becoming a professional day trader, or maintaining as a professional day trader, you know, the time that you have to put into it, aside from your family and your, you know, your regular job and whatever it may be, you know, there are things that you can do that can really step up your game, right? Obviously back testing, you know me, I'm a big proponent of that, but also just looking at some of these nuances. So I want to start pointing you guys in those directions. We'll take it, you know, steps at a time. So these are all 60-minute Euro USD charts, and what I want to point out is these really negative convergence type situations. And so I've got a number of them here mapped out, and you'll notice that major and minor are relatively, you know, on top as they're negatively converging, green on top negatively converging to pop on bottom. You know, above, let's just say, the northern hemisphere up here, right, above the middle of the channel. And then these other ones are oversold or below kind of the southern hemisphere. We're going to look at both as we go along here, and how we can approach some of these. And you guys will start to notice that if we're looking at just this negative convergence in these examples, then what does it mean when they're not negatively converging, when they're just parallel? And couple that with major minor or TNT. Now we're going to use major minor today, but you can also do the same with TNT. Right? If you're more versed with TNT, then you'll be able to adapt the same. But really the focus today is going to be on the pressure indicator. So we're going to have a quick exercise just on just a quick pressure exercise. Right? So for those of you guys that have never watched any of the videos on the pressure exercises that we do, you know, this will be you know, kind of a warm up to that. We're not going to take too much time with it, but let's go ahead and remove all of that. And let's get rid of the candlestick for a moment. And let's just go back. Well, we went really far back. Okay, 2016. Okay, so we're going to map out three things. Okay, one, we're going to map out when green crosses, let's do this, when green crosses intersects with red. Okay, just the intersection. That's all we're looking for, is just the intersection. So if green right here is down and then red, you know, it doesn't matter where they are or how far apart they are. And then when the moment or the candle, when green pops on top of red, right? Or even if they're up like this, right? And green crosses and intersects with red, right? Red keeps on going that way. Okay, so any of those intersections, we're going to mark those. And then after the intersection, we're going to mark when they start to point up. If green crosses on top, when they point up, or if green crosses on bottom, when they start to point down. And then we're going to mark the convergence. So this right here, right? So that's convergence, right? Green is starting to narrow into red. That's the cross, right? So we'll mark that one. We'll just make it a dashed line. And then when they point up, if they point up, let me do this real quick so we know where we started. Okay. So right there, now they point up. Make that one red. Okay. So those are the three things we're going to mark. So pointed up, convergence, cross, and they're also pointed down right there as well. So red's down, green's down. So that's both, right? They crossed and they're both pointed down. So we get them both right there. Okay. All right, we'll stick to very obvious convergence. So that's very obvious. There's you guys will get to the point where you'll start to notice this kind of stuff, but and what it means in combination with the indicators, because we're not trying to take a trade necessarily with these three things that we're mapping out, right? We're by themselves, right? We're not trying to say, okay, when this happens, take this trade or do this thing. We're just saying pay attention to when these things happen, because when they do, then you can get confirmation from another indication that will allow you to make a trade. And this is what makes pressure the most valuable. This is what makes pressure the most predictive indicator in the industry, guys, in the industry. Okay, this is predictive, all right? And predictive is only good if it's accurate, right? We use the analogy all the time, the weatherman. Well, cool, if the weatherman tells me it's going to rain outside, but he's wrong half the time, I don't want to listen to that guy, because it's a coin flip. Should I take my umbrella? Should I not? Should I plan for my commute? Should I not? Like, how do you know, right? It's anyone's guess if it's not accurate enough. But when it's accurate, then you know, okay, I'm going to plan my commute tomorrow because it's going to be raining, right? Or it's going to be snowing, or whatever it might be, right? Okay, so it's predictive, but it's not enough to be predictive. It has to be accurate, okay? And by itself, it works really well, right? But to make something that we can actually make a trade out of, right, it has to be significant enough that it's going to give us enough movement, not just go up, but go up enough that it's going to give us, you know, a consistent profit, a consistent take profit, right, within a reasonable stop loss, within a profitable stop loss, right? Okay, so we're not going to look at the ones that are not as obvious. We'll just look at the obvious ones. That's obvious convergence, right? It's very, very, very likely that on the next candle, green is going to be on top of red, right? Or next 1 to 3 candles, but it's very likely in this instance green is going to be on top of red. Just by merely the next candle coming out, it's likely that at the start of the next candle, green was on top of red, right? Okay, so we know that there's a high likelihood it's going to be on top of red. And there's other situations where, like this, that, yes, that's a very high likelihood the green's going to be on top of red. Okay, and there are others where they're a little further apart, where it's like, yeah, within 1 to 3 candles, green's going to be, or on bottom, 1 to 3 candles, green's going to be on bottom of red, right? We're here. We know it's almost certain that green is going to be on top of red. Chris, good question. I actually talked to them, and I'm going to cover that really quickly with you, but we won't go too far into it. But it sounds like they're going to do it in stages. It's not going to be immediately a shut off and then a fee. I think it's going to be done a little softer. We obviously threw a lot of tantrums in that regard, and so I think they've kind of backed off of that position. But it is prudent for us to start converting in that direction. I realize we don't all like change, but looking at especially pressure, and that's why I want to show you guys in Green Chart 2. Pressure on Green Chart 2 is awesome because we have that feed. We're using all services, and with Green Chart 2 we're using a direct feed, and that just makes a world of difference in pressure, which I'm really excited about. Believe me, guys, there's a lot that I still want worked out in Green Chart 2, but there are some really awesome, positives to making that transition. So I've just worked on selling myself on it, and because I want to be able to believe in it, because I want what's best for you guys. And to be honest, if we get our wish list, it will be best. If we get what we want out of this thing, our wish list, it will be what's best, and it'll be phenomenal. We'll just make the adjustment, right? And it'll be better for us if we get the wish list. Okay, so we've got this obvious convergence. Yeah, I'll still be sending out alerts, yes. So we got this negative convergence, and so we mark that because it's convergent, and then we get the cross. Obviously, that's something really abrupt. Just by looking at it, we know there was probably some type of announcement or something, but we're going to mark that, and we know that it crossed and it also pointed up, so we got the double right there as well, right? We got the cross and the point up, so we're not looking for the follow-up pointing up, right? Okay, again, we're going to look for just the obvious one, so we're going to disregard that for a moment. That's a little more obvious. We'll mark that one. And there's convergence. These are, yeah, we won't get it. I'll show you guys when we put the candlesticks back on. But we got convergence there. There's the cross. And they're not pointed down. So now we can wait to see if and when they point down after the cross. So right about there, about. Okay. And then, so let's do a couple more here. So like this kind of stuff, right? And this is not as obvious, but we can see within 1 to 3 candles that's likely to be on top, right? Really likely. It doesn't always happen, right? But it's likely that green will be on top within 1 to 3 candles of that kind of stuff. It can look a little better, but that's generally, you know, within 1 to 3 candles for the most part. Not always, but for the most part. Okay, so right now we're still waiting for the convergence, obvious convergence. So that's a little better. And there you go. So again, what did we say here? 1 to 3 candles, right? So not here. I mean, there was some convergence there, but it gets really obvious right here. And then 1, 2, 3, right? And there's the cross, and they're pointed up. Okay. I want to find one more where they cross and then later point in the corresponding direction. So we could look at this as convergence as well. That one's a little tough though. So we'll, you know, let's mark it, but I don't want to really use that one as an example. We'll try to get to some of those later. Okay, and then right there we got cross and point down. But again, I want to find one more where we get the convergence, cross, and then later point in the direction. So there was not really any obvious convergence right there, so we're not going to do anything there. We did get a cross and point up right there, so I'm going to dash that. Right there, obvious convergence. Again, right, just looking at this, we can see that on the next candle, just merely the next candle coming out is going to cause for green to cross on bottom of red. Right? It's very seldom that it doesn't. Go back and look at that. It's very seldom that green does not intersect with red when they look similar to that. Okay? So that is obvious convergence. Okay, there's the cross. So we'll dash that, and this will be the last example because here we want to wait for them to point down if they point down. Right there. Okay. So let's go back and look at our examples. Okay. First thing we're going to do is let's just add candlestick on there. Okay. Because I want you to just focus on kind of what happens, right? And we can see when we're looking at this like a pressure indicator, okay, not like the direction it's pointed, not a trend indicator, not, you know, it's a pressure, right? Okay, we can see that we had this down pressure, right here, and we had this down pressure, and then those lines narrowed. And as they narrowed, we got more wick and shadow and smaller candles, smaller bodies, right? And notice right here, even as these began to narrow, we got that, right? And later you'll be able to pick up on a lot of that, by the way. Okay, so there's the convergence, and then there's the cross. And look, I mean, we're not getting a lot of down movement, right? I mean, relatively speaking, right? I mean, this side, that's like 40 pip candle from wick to shadow, and this one right here is like a 6.6 pip candle. Right? So you can see a vast difference. And then we got that cross. So again, by itself, it's useful. We can see that pressure is dissipating when they narrow. When they negatively converge, pressure begins to dissipate, right? Go away, at least in that direction. Does it mean it's not still selling? No, it just means it's dissipating, right? So again, by itself, it is good. It gives you a lot of indication predictively, but in combination with other indicators, it can really give you nice entries and setups, right? And you can see that after all of this, then we know in this range, right, we were talking about the 1 to 3 kind of candle range, we start to see that softening and then different color candles. I mean, it's not a very big one. You can see it went from high volume to low volume, right? But you can see that, right? And then right here, we start to point up with pressure. Okay. And then right here, we get negative convergence, or negative from sideways, right? Convergence, and then cross, and then pointed down. Oh, they crossed and pointed down simultaneously right here. I'm going to make that red just so we can tell the difference. Okay. All right, and then so we weren't going to point out the obvious or the not so obvious ones. That's more not so obvious. And then right there we get the convergence. Okay. And don't be in a rush to get to this kind of stuff. If you don't understand what we're going over right now, don't be in a rush to get into this kind of stuff, because that will frustrate you to no end if you don't have any foundation, for understanding pressure. Because sometimes this is just going to continue to haul off in that direction. And other times there's just these small little nooks that after staring at these for so long, look, I'm going to go back real quick. I just want to explain to you. But you see how these are kind of like, red is like this and green is like this. So I'm going to make it more obvious, right? So if I just drew a continued line there, it would look like this, right? So if they were projecting light, it would fan out the further you got from it, right? But then here, those lights, red is like this, right? And green, I'm going to make them obvious, and green is like this. So we can see if I projected from there, the further that light went out, the closer those lines get together, right? And that's just how I explain it in my brain. That may not make sense to you right now, but it's just kind of how I make sense of it in my brain. And when I see it, it's obvious for me, and for some of you guys. But for others, it's not. And it takes some getting used to. So that's why we're sticking to the obvious for everyone. That is obvious for everyone, right? That is obvious negative convergence. Why is it negative convergence? Because pressure was down, and now it's dissipating by coming together, and the convergence is going to start softening or reversing whatever direction we were going in, right? And right there is the convergence, and right there was the cross and move up. Obviously, this did not tell us, I want to be clear, this convergence and this convergence did not tell us that was going to happen, okay? The only reason I know that is because that is out of place, right? Which means that is not normal market conditions. This is an announcement. Just looking at that, I can guarantee there's something that happened right there that caused for that to happen. And looking at the time and offset by 6 hours my time, that means that this is, so this would be 12. So this is, I bet 30 minutes into this candle is when it started to happen, right? Because what happens at 8:30 Eastern? The first announcements for USD, right? 8:30 a.m. Eastern, the announcements for USD. This is a 1 hour candle. It started at 8 and it ends at 9. So somewhere, it's very likely that within half an hour of this candle being formed, there was an announcement that came out and just shot it up, right? So it may not have been at the beginning, but at some point, probably within 30 minutes of that candle, it started to go up. So I want to be clear, yes, this was telling us be careful because we're going to start reversing, and we absolutely started reversing, and then this happened. We would have still expected some reversal, right? Some, some up movement, but that obviously is not the up movement we would have been expecting. That's announcement. Okay, so there's the dashed dotted line because they crossed and pointed up simultaneously. Okay. All right, so let's wait for that. Okay, so again, right here, we're not focusing on the not so obvious convergence, not even that one. We'll wait for the little more obvious convergence, which is right there. So mark that, and then, but notice that as that, I can't point that out. Okay, let's just move on. Let's just look at the obvious ones. All right, so right there, and then cross. So now we've marked the cross. So again, these lines are pointed up, right? But we can see that we had this big moves and then softening, right? But we're talking about this is ends at 7, ends at 8, ends at 9, ends at 10. So we expect this around that time, right? That sideways type movement on the Euro USD around that time. Okay, so we had the cross, and we're still not pointed down. Okay, right there we're pointed down. And the reason why I want to show you the difference is because this is showing us what's already happening, right? And that's useful because, if the weatherman says it's raining outside, well, that's useless. But if the weatherman says it's raining outside and it's going to continue to rain for 2 hours, that's useful, right? So that's really useful that the pressure indicator is telling us it's raining outside, and then in combination with other indicators, it could tell us how much longer we might be able to see some rain, or it's sunshine outside and it's going to rain later, right? Whatever it might be. So that's still useful. But the reason why I want to point those out is because these are telling us what's going to happen, and this is telling us what's already happening. Okay, so it works in both facets. All right. So right there, and we can see right here, I mean, there's, even to this point, there's negative convergence, right? But we're not pointing those out, we're pointing out the more obvious. So right there, and we can see it's kind of going sideways, right? And that's kind of what that pressure was indicating, sideways pressure, negative convergence, and then, but it's biased to the short side because green's on bottom, but it's starting to negatively converge because we might get a little uptick to the long side. All right, there, now we've got convergence, and then the cross, and there's the cross, and they're both pointed up. I'm gonna mark that one red. And then more convergence, yeah, we just marked it, and then the cross. So again, we see that right, not necessarily there, but right here we can see, okay, we're starting to get some reversal back in the other direction, right? And then green pops on bottom, they're both pointed down, so that gave us both at the same time. So we got the cross and the direction, and then we'll go to right here. We get cross and point up. We didn't really get any obvious convergence, right? Not right there. A little bit there, not much. Definitely not there. And then all at once, it just happened right there. Let's adjust this. Yeah, no wick, no shadow. Okay. And then right here, obvious convergence, cross, and then we wait for them to point down. Right there. Now they're pointed down, right? Because what just happened? The market moved down. So now they're pointed down. Okay, we didn't mark that one, so we'll leave that one alone. Okay, and I think that was our last one. Yeah, okay. So I definitely spent more time than I wanted to. But I want to show you guys that because when we look at what we're looking at here, we can see something very similar. So we've got that convergence. We've been moving up. As a result of that convergence, market has kind of softened or flattened, right? It's not moving as aggressively, right? If we track this back, we can see, look, we've got, yeah, I mean, holy cow. Yeah, we're getting it all the way back to right here. But we're going to, again, we're just going to look at the obvious ones. So there's the obvious convergence. And then we got major minor overbought, right? But we can see that because of that convergence and because they've been overbought for a while, that we're likely to get that pullback down, right? That major and minor are going to kind of follow through. And this is that situation where fair weather fans, minors are leading the way and majors are going to follow, right? Even if it's just for a moment. And we get that follow through, right? Okay, let's look at this example. So here we've got, again, so look at this. We've got all this, and I'll go back in a moment. Look at all this down, and then it starts to soften. Look, pay attention where it softens right here. These three candles right here. Watch. Let's go back, just based on what we were talking about a moment ago. Right there, okay? So not too obvious yet. Now notice how these are pointed, and right here we get some narrowing. A little bit of elbowing on the green. It's very subtle. So that's why I'm not pointing these out as obvious, as aggressively. And then right here, a lot more narrowing. And then right here, obvious convergence, negative convergence. It's very, very likely that within 1 to 3 candles, green's going to end up on top of red, right? And boom, next candle, green's on top of red, right? We did get some pullback. Now, we also had major minor oversold. They're kind of soft up. There's a lot there, but again, it's followed kind of the systematic that we were talking about, right? And so did we get some pullback? Yeah, we got some pull short, 10.8 pips, right? We got that convergence already, so we can see we're still kind of in that sideways range, right? And then some more down even there, 10.3. That one went lower. But then we start getting different color candles, right? So again, what's going to be relevant is what time of day, all those different things, right? Because that would not be a very successful trade. 10.8 draw, and after all these candles have only gone 1.4 pips up. But you can, what we're trying to illustrate here, though, is that when we see that convergence, we see a change in what's already happening, right? We see a change coming. And what do we get? We're getting those sideways, different colored candles, right? So after that, it's just positioning. It's just learning to position correctly. You know, we get a run up there after a while, but you see what I'm saying is we're seeing this run up happen. All that's happening, we're seeing that all being predicted even up to back here when all we have is red candles. And sometimes it's just momentarily, right? Just a few candles, and then other times it's long term. And when we use major and minor and position them lower in the channel so that they have more room to work their way up as pressure makes its transition, then we end up with a more robust outcome, right? And after that, it's just 5-minute positioning. And you can get yourself into situations where you're entering trades down, you know, somewhere in here and then moving back up. And then, you know, from here is only a couple pips, but from somewhere down here, that's a quick, you know, 5-pip scalp, 3-pip scalp, whatever, right, using a 5-minute positioning. We're not going to do that today, but I'm just kind of showing you how we put all this together for a discretionary approach, right? Not a systematic, but a discretionary approach. But I'm doing my best to show you in a very systematic way. Try not to lose you guys. Okay. And that's not a diss on your intelligence. It's just if you're never focused on this, you're not expected to know this, even if you've been around for a while. And that's what we were saying a moment ago. Even if you've been here for a while, if you've never focused on these things, you don't know them, so you're not expected to just know them just because you've been around. And for a long time, I felt like that was the expectation that was put on me and the people that I was around when I first started, was that we were just expected to know some things, but we never knew where to find the information or who to ask, or it's like, okay, we just are expected because other people look like they know. Well, it turns out a lot of people didn't know, you know, and so I just took it upon myself to figure it out, took a really long time and it was painful. Okay, so again, we're not going to look at the obvious, but you can see as these narrow, right? Like even, you know, up to here. Well, maybe not there, but you know, a little more there. As they narrow and start projecting closer, we start seeing that softening, and then more convergence, obvious convergence. So again, right here, this is one of those scenarios where within 1 to 3 candles, green's going to pop on bottom of red. Okay, and when you really start to understand the power of that convergence and green crossing, you'd notice that a lot of times, vast majority of the time, that when the cross occurs, there's a different color candle. Right? There's a red candle. There's a green candle. The cross occurred, and now there's a red candle. Obviously, if there was already a red candle, then generally we'd see another red candle when that cross occurs. Okay? So what I'm saying is if you can very accurately predict when that cross may occur, then you know what color that candle is going to be. If it's up like this and that cross is going to occur, and you see that you've got some good indication on major minor that we can continue or that supports that direction, then it's very easy to make the decision that that next candle is going to be a different color, right, than the current. If it's up like this, then we're going to see a red, or if it's already red, then we're going to see another red, or some type of short movement, shadow or something that is going to indicate that short movement occurred, right? And if it's oversold and green's narrowing to red, you know, like this example, and we'll go to that one in a moment, then the different color is going to occur, right? Where this one, it would just be another green if we're looking at this last chart, but let's go one at a time here. Okay, so the cross occurs, we see the red candle, so we can see that we, you know, in addition to the fact that it's kind of sideways, but we saw that narrowing and then coupling it with the indicators, that gave us some validation that we're going to see some short movement, right? And mind you, you can go back and mark these types of scenarios and just get rid of all the other indicators and candlesticks so that they don't affect your judgment in marking them. And then go back and see, what am I noticing? What does my eye pick up on? Right? And you can start seeing those correlations and realize where you need to tighten up or loosen up your parameters so that you can see it more dynamically. Okay. So again, we saw that change beginning to occur, right? And having major and minor positioned higher up in the channel, again, gave us a more robust outcome. Okay. So here again, all these green candles, and we can see, and again, going back, like looking at this, look at that elbow right there. That was a result of that, right? And sometimes it's just reacting to what's happening, not necessarily predicting what's going to happen. But you can see that pressure is very keen on picking up on some of those just subtle, you know, tweaks in the market, right? So right here, we can start seeing that narrowing. We're not pointing those out right now, right? We're not focusing on those. And then right here, we get a more obvious convergence, right? And then we get the cross. So again, it's very likely that in this situation, 1 to 3 candles, we're going to get the green cross on bottom of red. And when it crosses, we have a different color candle. We had a green candle, and now it's red. Or if we had a red candle, we'd get more red, or at least some shadow that indicated that the market moved short, right? Okay, and then right here, if we go back, see again, red candles. If we go back, we're not pointing out any of those. That's not obvious. See, that one's rough. Those are the ones I don't want you to get caught on, right? When they're far more separated. Now, in these scenarios, it is still really likely that within 1 to 3 candles, especially with major minor doing what they're doing, and that they'll start to narrow and cross, right? You'll get a less desirable result in those situations just in terms of the movement. because a lot of times by the time they cross, the move's done and it's going to go the opposite direction. But and we know that this doesn't cross within 1 to 3 candles, but it is still very likely when we see some of these, we'll just call them chomps, start to occur. Now this is not a very good one. You can see green is still pointed down and red is, so they're still really far away from each other. If we just kind of shined a laser from here, forward, and then from here forward, we can see that, yeah, somewhere off in the distance they will, cross, but it's not close enough that it's going to happen quickly. It's not likely to. It can, but it's not likely to, right? But right here, so we're not going to look at that one. That one's no good. No. So we won't look at that one either. This one's obvious, right? Right here we can obviously see that it's very, very likely green is going to cross on top of red. And in these situations, a lot of times if we see a green candle, we're going to see another green, where if this was a red candle, then we know we're going to see the green, finally start seeing a green candle, right? So it's nicer when they're red, and then we can kind of predict that green because we'll get better movement out of that, right? We're catching kind of the bottom there. But we know we're going to get the cross, right? So even if we have a red candle there, a lot of times it's still likely we're going to get some type of wick, and then maybe some sideways. But a lot of times it'll start to come back and move up, right? As these kind of green crosses on top, maybe it goes through a sideways, So if we have a green, then sideways the green is going to be red, and then green, and then red, and then it'll pick a direction, right? So right there. And we see we got that up movement even initially, a little bit of down, at 6.3, but we got indication that it moved up, and in this case it was like, 16.3. But it gives us that room, right? So even if we're only going to go through 3 candles, or 3, 4, 5, or maybe 3 and then sideways, and then it picks a direction, starting the major minor off at a lower position as we start to get that convergence creates a more room to push in the predictive direction, which in this case would have been long. Okay, so let's look at so I'm really digging what we can see with the pressure indicator in green chart 2. So right here, we can see we get that convergence. Actually, green's kind of crossed on top right there. The convergence happened earlier than that, but we'll start here because it's a little more obvious. And then we see that green pops on top, right? We get that cross, and we get that green candle. And let's go to our next one. So again, all I did was looked at the overbought first and oversold first to make sure, well, I looked at the convergence and then made sure the major minor were either overbought or oversold when it was occurring, because I wanted to just look at those examples, right? Or within that upper hemisphere, lower hemisphere. Okay, so right here, minors kind of run away. I marked this one just because we've got that convergence. But again, in this situation, we're seeing this a result of what's already happening. And it doesn't mean it's not going to continue to happen, right? But we're seeing the result of what just happened, and that's where we get that kink in pressure. And that's why I marked that one. Okay, and we're going to look at this chart for our next one. Now we're oversold. Okay, we're only going to point out the obvious ones. So for those of you guys that are getting ahead of the class here, just stick with me. And if you find yourselves getting ahead and saying, "Oh wait, but I noticed something. Why didn't he mark that?" Good, you're on the right track. You've already, you already have an eye for it. For everyone else, we're just trying to look at the really obvious ones, right? Okay, so we want really obvious. You can see as that narrows, look at the result, right? We're getting a lot of body and then small body, a lot of wick and shadow, right? But we didn't mark that one, so let's continue. Okay, this one right here, obvious. With the next candle is almost certainly green's going to be on top of red in pressure, right? And it is, green's on top of red. We do get some shadow right there, but we get a green candle. We get the cross, we get a green candle, right? And you notice most of the time this is pointed down, right? That's why we're not always concerned about which direction it's pointed, because the direction that it's pointed is only telling us what's already happening. Sound familiar? That's what a trend tells us. This is trending down. Well, wonderful. How long is that going to last, right? And it is only going to move down? No. Even a downtrend, the market moves up, right? That's what makes it a trend. Moves down, then up, down, lower, then up, lower than the previous high, down, right? But we still get ups, right? And when does it end? Well, it ends when it stops trending down. But there's no real way of looking at a downtrend and telling where it's going to end. You can tell when it ended after it's ended, right? So it's only good after the fact. And sometimes that's the case with what we see in some of our other setups. It's like, well, everything's pointed up. Well, it's pointed up because the market's been moving up. The question is it going to continue up? That's the real question, right? Okay. And let's look at this chart now. Okay, we're going to look for the obvious. So right there. Okay. So right here, we get the more obvious convergence, major, minor, you know, giving us a little bit of validation there as well, kind of on the upper part of the chart of its range, right? Not below the 50, and we're getting that negative convergence. I still get some pullback. Green crossed on bottom, right? We only got a little bit right there, right? Which is like, that could have happened regardless. But a lot of times when that green crosses on top, we could get those moments of sideways, right? Because I mean, we're not really moving beyond kind of this range right here, right? Between this top line and this bottom line, where what we just came from was all of this, right? And there was some indication back here, and you guys will learn to look at that. But what we wanted to focus on was the more obvious, which was this candle right here prior to the cross, prior to it crossing below red. Kind of get more of that back and forth, right? Sideways. But having major, minor overbought before the cross occurs and just looking at the convergence, again, gives us more room to make a play, you know, in that direction. And this is just, I mean, it really didn't move very much from where we marked it to down here, right? So again, it's mixing it in, right? If we had 5-minute positioning, would that have changed it up? Absolutely, right? Maybe it would have meant that we just didn't get any positioning, we didn't take the trade, or we got some positioning, we're able to take advantage of that up move as it pulled back down to that sideways range. Okay, let's go to the next one. So we'll be looking at this chart. Obviously, announcement, looking at that. Okay, we'll wait for the obvious. And as you just focus on pressure, as you focus on just looking at pressure, it really starts to resonate. You really start to see, those really subtle nuances. Okay, so right there, again, we've got that really close narrowing. So within 1 to 3 candles, we know that green is going to pop on top of red within 1 to 3 candles, right? And boom, right? So this is a really good example because we can see all it did was cascaded down, with the exception of that little blip right there, place where it was like really tight narrowing. Major, minor were almost like that. Well, minors were kind of up, majors were down. But we could see that they were below kind of that, middle range. And that narrowing where we saw, okay, green's going to pop on top of red on the next candle or next 1 to 3 candles. Click over and we see, oh, look, what do you know? There's a green candle in the midst of reds. All right, let's look at our last example here. That's a really good example of the previous candle. Sometimes if I go back, it messes everything up, but let's try. Positive convergence, right, which is actually really rare. We can see that positive convergence where green is going to start leaning into red, and then coupled with what we can see in the indicator, in the other indicators, gives us credence to continue. And I know we're not focusing on that right now, but yes, this is showing us what's already happening, but it is also giving us indication of continuation, right? We've barely, arrived oversold to minors. Majors are not fully oversold yet. We have positive convergence, which is telling us there's still strength to the short, to the sell side. And then we get the cross right there. But we're not looking at those. We're looking at the negative convergence examples. Let's go. Why didn't we mark that one? Let's go back for a second. Maybe I meant to mark it. Anyway, here, we can see that even right here, back to here, well, that had just crossed. So right here, we can see that converging occurring, right? And then we know 1 to 3 candles that green's going to pop on top. It did pop on top on the next candle. We did get some kind of breaks put on, right? Big red and then right? We get wick, shadow, small body, right? So we start to see that coming. Now again, it doesn't mean that the market's just going to start reversing and bust up, right? But again, when we mix it in with other things that we're familiar with, TNTs, major, minor, then we can start putting together trades using pressure leading, right? So maybe it's because that one wasn't as obvious, but I didn't mark it. But I'm not seeing any marks on. Let's just keep going. Maybe they're further along. GJ, so GJ is looking like a good example of this on the live candle, with very obvious convergence and overbought. The candles are still decent size looking. Let's take a look at it. GBP-JPY, yeah, this is a really good example of that, right? Look at this narrowing, right? Within, 1 to 3 candles, we're going to see that cross on bottom, right? So how would we play this out if we're looking at this? Okay, we can see that majors are pointed up, and they're high in their range, so they're likely to digress, and this could very well happen before this candle ends. There's only 7 minutes and 39 seconds, but we can see that this could, if it remains that way, which would be favorable, to just continue to press up and not digress within 7 minutes and 20 seconds. And having this convergence, we know that these are going to, even as soon as the new candle comes out, we may see them kind of let off a little bit. And even if the next candle goes up, we're going to see some down within that next candle, right? As these, especially if the tension stays up on those, right? And so it looks like, okay, minors could very well lead in that short movement, right? We see the convergence. Green is very, very likely on the next candle to end up on bottom in pressure, right? And then we've got our majors that are just tweaked really far up. So right here, good call. Who was that? Jordan. Right there. So how I would play that out, and I don't want to get too far ahead of you guys, but I would have been looking at a 5 minute. Right? So look at that 5 minute and wait for that positioning. Now, it was probably ideal when it was up there, honestly, because we had majors. I bet majors were up here, minors were up here, right? And that would have been, that ideal. This would have been ideal with 52 seconds left on this candle. So in 5 more minutes, right? That would have been nice to have. Because that would have just been textbook entry. So let's watch this for a moment. Let's see how this plays out in live, right? We got that predictive thick orange already. We can see that right here, right? So right there, predictive thick orange, that's down, green candle. Minors are trying to take the short, majors are kind of creating the hiccup, and we got pressure that's narrowing, but is still up. And so that's giving us indication for long right there. And then this narrowing and majors kind of being maxed out, minors not budging, is giving us indication for short. And then we'd look at the 5. So, man, again, that would have been the bee's knees right there. I kind of want to let's see, we have 4 minutes before this turns over. Let's go back here, watch this. Just looking at it, I know that's where. And if you guys watch, I'm not making this stuff up, right? I mean, you guys can watch the videos on positioning, and that's what I would have been looking for, right? 5 minute positioning or anything like that. And that's just like some really simple stuff. But let's look at this one really quickly. So I know we're blurring the lines a little between systematic versus discretionary, but using the 5 minute positioning, are you wanting for 60 to post or just close enough? It's not often that I trade on the post because I'm using more discretionary method. Look, right there, guys. Boom. Look at that. That's a 5 minute. Beautiful. That would have been where it was at, right there. Now, when I show you guys positioning, I show you guys wait for the post because that's systematic. Because you need to know, okay, if the post occurs, then that remain that way, and the next candle is going to give us that reaction. After a while, though, you're not having to wait for the post. But I can't decide that for you. I can't say, well, after 6 months of doing this, after a year doing this, you'll realize, you'll start to see, and you need to trust yourself enough to know, okay, this is where I would be entering this trade. And there's a lot there, right? I mean, look, we got that, we got that, even just the candlesticks, right? Kind of had that, and then back up right there, and then major minor pointed up. The 60 minute already doing its thing with the narrowing. I mean, all that stuff, right? So we had a lot that would justify, in my mind, that I could have shorted at that point, right here, without the candle ending. Yeah, thanks for pointing that out, Jordan. That's awesome. So we're going to be able to watch this. So let's just take these last couple minutes. Erase that. Yeah, that would have been my mark right there, 142.84. And did it go beyond that? Yeah, but I'm just looking for my mark, right? I don't expect that I'm going to get zero drawdown, right? But I mean, really, in the grand scheme of things, it's 1.2 pips. It's not much, right? We're still keeping the tension on the major right there, so that's good. I'm going to fast forward this so we can catch up to live. caught up now. Okay. Look at that. That sucker still went up. 5.8. It's the GJ. That's how it does, right? It swings. So let's watch this right here, this pressure. Minute and 15. Twenty-six seconds. So majors softened just a little bit. Did green end up on bottom right as soon as the candle changed over? Right? As soon as the candle changed over. Let's look at green chart 2 for a moment. Here's GJ. Whoa. What is going on here? I got something wrong with this chart. Look. That's where the candle is. Look at this gap. I don't even know how to refresh that. Let's try this. Nope. Still got that gap up there. What the heck? Anybody else getting that on their charts with the GJ on green chart 2? It's got a big gap right here. Closes there, opens up here. Okay. So initially we're still moving up, right? Just a little bit. Just started the candle. So watch this one, guys. Green did pop on bottom. I mean, it's not like we did a full analysis on it. We're just looking at it as an example. But we would expect that at some point within this candle we can see some short, right? I mean, we didn't check announcements either, but at 10 o'clock GJ, I wouldn't expect to see any announcements, but it would be prudent to check things like, you know, CNBC, things like that. But we would expect to see some type of digression here, especially because we were just really maxed out on major. And even initially when it first started, it kind of softened a little bit and are kind of recommitting. Green popped on bottom, but we saw that narrowing. So great example. Even if this moves up, right? We don't win them all, but this was a really good example of exactly what we were talking about today. Exactly what we were talking about today. So good eye on that, Jordan. Definitely keep an eye out for that type of situation right there, and track this one. See how that one finishes up. We got the cross on pressure, so we expect some type of down movement, right? Looking at that 5-minute, yeah, there definitely could have been a better place for positioning on that 5-minute, right? I mean, we said somewhere in that range, and that's gone like 9.1, which on the GJ, I mean, anytime I've ever traded GJ, I'm expecting, even 20 pips of draw, so I try to position as aggressively as possible. But I'm also expecting to get, my fill. Euro USD I can generally shoot. I can hit within a 1-to-1. GJ is a 1.5 to 1. I can probably do pretty consistently. I feel really comfortable with a 2-to-1 on the GJ though. So, because I know sometimes it'll just bust in one direction and just haul off. But keep an eye on that. Keep an eye on this candle, this current candle right here, and let's see if we get any significant down movement. Considering that we've already moved up 6, pips, let's see if we can get a 10 to the short side before we get a 10 to the long side on this right here, just looking at kind of what we're looking at here with Jordan. On 2.0, click the little setting icon and switch data provider to secondary. Okay, let's do this together. It's right there, there, and data provider, secondary, reload. And then it looks more like 1.0 if you still want to look at it. Awesome. Yes, thank you. Okay, good. Yep, so right there we got the narrowing. Right there. And then the cross. And we'll see how this one works out. So narrowing, and then the cross. It's moved about 6.9. I'd like to see it go at least 10 short before 10 long. All right, guys, keep an eye on that. Jordan, that was awesome. Thank you for pointing that out. That went perfect with what we were talking about today. So keep on the lookout for that one. And that's all we got for you guys today. Appreciate you guys joining us. And if you guys join us for the sweep, then we'll see you on Friday. Otherwise, we'll talk to you guys next Tuesday, of course. As always, like the video, comment on it, check us out on other social media, and we'll look forward to talking to you guys next week. All right, thanks, guys. See ya.